China Beige book out with exclusive new data on China's fourth quarter and the macro outlook for 2026. And joining us right now for that is China Beige book CEO Leland Miller. Leland, by all accounts, it looks like China's economy was okay in 2025. Not anything that's gangbusters, but something that is not in real trouble either. What did you see in the fourth quarter?
Yeah, I think that's right. It just wasn't the path that official data told us along the way. So if you look through official data, early in the year, there was a lot more strength that just happened to be projected during a time when Xi and Trump were, into another trade war. And then as we got later into the year, the data started to weaken. We didn't really see that. We saw an economy that was thoroughly mediocre sort of all the way through. There wasn't these giant ebbs and flows, et cetera. So you have an issue where a lot of the strength that was projected earlier this year was done for geopolitical reasons, not because it was in the economic data. And then they reported weakness later in the year that we didn't see. You also have a separate dynamic in which statistical normalization is happening across a lot of these pockets of Chinese data that have been overreported for years, particularly fixed investment. So you see these months where it looks like some of the data have fallen off a cliff. Oh my gosh, October fixed asset investment looks like the economy's crashing. Nothing like that was actually happening. It was just the Chinese, tinkering back, changing the data so that it was going to be looking a little bit more normal over time as they try to fix things that they did erroneously in previous years.
You said that part of this is because of China's priorities, and that's pretty interesting, too. Can you lay out their priorities and then explain how or why, if it does have any impact on things like you saw corporate borrowing notched its second weakest level on record? Steel producers reported another quarter of accelerating output, and that came despite weakened profit margins. So there's clearly some signs of some state interference there.
Oh, yeah. I mean, that's China's economy. I won't bury the lead. The idea is that China's economy is not very good. But at the same time, Xi Jinping doesn't care. It's good enough for Xi. And I think that the reason that's important is that when you see these really weak data points, particularly in the fall, released, you think, oh, my goodness, bad things are happening in China's economy. They will have no choice but to do bigger stimulus. It doesn't come, and everyone's scratching their head. Why is this? Well, one, because the economy is not so weak that Xi thinks there needs to be bigger stimulus, but also because some of that weakness is not actually there. They don't like reporting some of the downward trends during periods of geopolitical stress. And so when there's, later, when there's sort of an uptick, they don't report the uptick either. It's all sort of smoothed out. So the economy's not doing great. And there's a lot of stress on the export side, too. That can't be the growth driver forever. But it's not falling off a cliff. And I think people have a hard time, dealing with that projection.
What do you expect for 2026? More of the same?
More of the same, but more weakness. I think people are looking at AI and some things in advanced technology, and they get really excited about China's economy. They say, oh, look, great things seem to be happening. The economy must be improving overall. That's not what's happening. There are enormous stresses on China's economy right now. First is that, consumption is extraordinarily weak. And one of the things they've been doing all year long is pulling forward consumption with these trade-in programs. That works the first time and maybe the second time, but there's only so many times you could trade in your toaster and you want a new one. So you've got an issue with consumption. The second thing is exports. The export machine has been going gangbusters for years and years, but there are political frictions on the horizon. There are political frictions now that are pushing back against this. So there are a lot of obstacles to China's current and limited growth drivers that they had in 2025 that are just going to accelerate in 2026, even if the U.S.-China geopolitical situation doesn't deteriorate any further.
But you say some of the weakness that we see in these numbers is more of a sign of that statistical normalization than any sort of a collapse that's coming for China.
Yeah, that's right. So a lot of the data points in 2025 that got people really worried. So October, for instance, fixed asset investment looked like it fell off a cliff. Everyone's scratching their heads saying, what in the world happened here? What can China do to fix this? Well, they don't need to do anything to fix it because nothing's happening. They're just sort of rectifying the numbers from where they were in previous years. One of the things we've done for several years now with China Beige data is set our stuff aside, say, here's what's actually happening. But here's the way the Chinese change some of the numbers. They change the basic comparison each year so that the retail sales look like they're not falling in a certain way, or fixed asset investment doesn't look like it's falling too dramatically. There's some tweaking that goes on there, though. And so overall, you have a situation where every once in a while you get something looking like the bottom's falling out in the economy, but really what you're seeing is cooling as the data adjusts to what they should have been from a year or two ago. So a lot of this is actually trying to look deeper into the data and say, what are the trends we need to be filtering out from official data projection?